Hi, this is Mark Courtney, creator of the 1040 Tax What If program. I'd like to welcome you here we're going to do a quick overview of the program here today. I want to share with you how you can produce a simple yet accurate one-page report for your client or prospect, which will enable you to give answers to their what-if tax scenarios, helping gain their trust and confidence, thus reducing their need to go to their CPA or tax person. Certainly, we're not advocating cut that person out if they're comfortable going there, but at least you'll have the numbers to back up your concept or your strategy. So let's get started. Your simple three-step process. Step one is we're going to enter in the name and filing status. We support single or married filing joints. You're going to choose one of those two. In step two, which we're going to reference as column 2, we're going to enter the income. And usually that income is going to be found on their latest tax return. So here we see the income by the line number and by the category. And so we take it right off the tax return. We enter that in. Example here, line 7, wages. We would just enter that amount in here. And so it's important that we're reconstructing the return for credibility purposes, and that we want to make sure that we get everything entered in properly. As we're entering this, here I've entered in some numbers here, dividends. We've entered in some pension annuity. I've entered in a gross Social Security. The lines below that taxable Social Security on that are automatically calculated for you. So these lines are filled in automatically. As you can see here, on their Social Security benefits, what it automatically calculated was 58% of their benefits are being taxed. So we know that they're not at the 85% level. Also, it shows the actual tax. So again, we want to balance this all back against their tax return and make sure that we're lined up for credibility purposes. The third step, column 3, is our what if column. And here we're going to make adjustments to that income. So again, we call it the what if column. We make our income adjustments, we add or subtract income, and we can do that to any line or any income category. So as an example here, I've just taken a $100,000 distribution from their IRA. Maybe they're wanting to convert it over to a Roth, maybe they're wanting to do something else, or maybe you're trying to illustrate some other concept or strategy to them. But it also did, by taking that, it also calculated more of their Social Security benefits being taxable. So instead of being at the 58% level, now it's going to take them up to that 85% level. We'll see here in a minute. So it's adding an additional $109,000 to their income, or creating an additional federal tax of $24,269 by employing the strategy. Column 4 is our revised column, and that just shows the revised income numbers after we've made our what-if adjustments. So it's combining columns 2 and 3 together. There's nothing you have to enter here. It's automatically calculated for you, and it's filled in. And so it gives us this side-by-side comparison. We see the 3 columns here, column 2, 3, and 4. Of course, we have our original column was 2, our revised column is 4. We made adjustments in column 3, our what-if column. And so it gives you this kind of before and after scenario here side-by-side. We do have several reports. This one produces our most popular report here we're going to look at. It's condensed here. It's all on one page. So we're going to take a look at that, kind of break it down just briefly. Here's the income section. It's showing, your original column here to the left. We made our adjustments, added income, made more Social Security benefits taxable. Again, as you enter this number in, it's going to automatically populate this taxable Social Security. Our revised column showing the revised numbers. We see that, originally we had 58% of their Social Security benefits being taxed. When we added their income, it took it up to that 85% level. The middle section of the report deals more with their total income. So we've got gross income on adjusted gross on line 37. We also have taxable on line 43. We see they're in a 15% tax bracket before. After we added the income, they were at 25%. Of course, it lists out the before and after taxes. And then on the original input screen, you can make notes pertaining to what you're doing with the return. So there's notes here for the original column you can make, and then whatever you're doing in the revised column, the what-if adjustments, you can make notes for that also. Bottom section deals mainly with gross income. It recaps, so it's showing their true gross income here, what percent of that gross income is going to taxes. So we had here before, once we made our adjustments afterwards, it's showing what their taxes are, and it's doing federal tax, net investment tax, and if you're estimating state income tax. So that gives you your after-tax income, spendable income. Also, if they're subject to a higher Medicare premium, if they're on Medicare, it's going to show you what they originally were paying. It's going to show you if it increased or not and what the after effect was going to be. The bottom here is just a real simple, quick disclaimer. So I'd like to thank you for tuning in. Any questions you have, you can certainly call me direct there. There's my direct number. If you prefer, you can also email me there, mark@seniortaxsolutions.com. So again, thank you, and we look forward to talking to you in the very near future.